Hello and good day to all friends. This is Mushtaba Rossi from the Thales Group, and today is December 5th, 2025, and I'm here with you with a midterm review of Bitcoin status, focusing on the expiry dates remaining on December 26th and the end of January. Well, in the first image, you can see the trades have been happening since November 20th, that is, after the last drop and hitting the 8,600 bottom. For the December 26th expiry under review, you can see that traders are expecting a top for the end of December, with the average at the gamma short point showing around 105,000. Overall, the curve indicates a call selling trend, which in order shows us the tops at 95,300, 99,800, and 105,400. Among the buyers, there is a decisive dominance with 36,000 Bitcoin compared to 10,000 Bitcoin by the call buyers. So in this period, we reviewed for the end of December. The buyers are completely on the side of the call buyers. The target for these call buyers is also above 100,000, meaning they profit above 100,000. The target for the put buyers is 81,000. On the other hand, the put buyers are in the minority, but they are targeting 81,000. Among the sellers, there is also a decisive dominance with about 48,000 Bitcoin compared to about 10,000 Bitcoin. Among the call sellers, these call sellers have set a ceiling around 98,500. In contrast, the floor set by the put sellers is around 81,200. So overall, the outlook favors the bulls, and this upward trend has already started since early December. But naturally, since the time frame we're analyzing is longer, there will be differences. Alright, in the second slide, we move the slide forward up to December 4th, so we've moved forward to December 4th. From December 4th, the bullish sentiment is starting to show itself. In fact, as you can see, we have a large short gamma at the bottom, with the average low showing at 88. This indicates that we can still expect a move to the downside until we see levels like 100,000, and you can also see a weaker long gamma appearing on the upside, which, in fact, right here, it shows us the average call buyers at 113,000, and the start of this bullish move, meaning the delta starting to shift upward along with the price increase from around 100 and 5,100 and 6,000, this starts at 105, 106,000, which actually shows the importance of the 105, 106,000 level. Alright, let's move on to the next slide. You can see the intersection of the buyer and seller curves for the end of December. The lower agreement is at 74,000, and in the profit and lower zone, it has formed the agreement zone as well. So in December, we could actually have the possibility of a surprising move to the downside as well. Of course, the 74 is because, in my opinion, in this chart, we've included trades starting from the 29th. The 29th was also the last low we saw when fear dominated the market. And now, in the next slide, you'll see that this outlook has improved. So this 74 is because of fear. It doesn't necessarily mean that we're going to head towards 74. You can also see that the upper agreement is around 101 and 900, or about 102, and it's in a loss. In the next slide, you'll see that we've moved the slide forward to December 3rd, up to December 3rd. As you can see, traders' outlook has improved a lot. This is an improvement in outlook. It actually started from December 1st, but since it didn't show itself very clearly until December 3rd, we chose December 3rd. The floor has come up to around 84,500. You can see how much it's risen from 74 to 84, and the ceiling has gone up to about 105. Of course, the agreement is still low in profit, keep that in mind, and there's still a possibility of a downward move. This means that we'll probably see a correction toward the 84 to 88, maybe 86 range. We'll likely see a pullback before heading toward actually 100,000 and 105,000 with trades above 500. We filtered Bitcoin for the end of December. It's still the biggest and most significant strategy we're seeing. It's the Iron Condor, which I mentioned before, and it comes from 7 Iron Condor strategies, totaling 48,000 Bitcoins. This is a very important point. We filtered trades over 100 Bitcoins from the beginning of December for the end of December. This is actually very important, from the start of December for the end of December. For the end of December expiry, trades over 100 Bitcoins. As you can see, actually, this shows a large volatility zone. Of course, I think if I'm not mistaken, it was from 100 to 500 Bitcoins. I also set the 500 Bitcoin limit on the upper side. Yes, I set the 500 Bitcoin limit at the top. So trades between 100 and 500 Bitcoins. For the last part, as we can see, there's a large volatility zone visible, which contains two peak profit areas. One is at the top at 55,000, and the other is at the bottom, 80,000, on the lower side. You can see that 80,000 is more dominant, which again shows we can expect a possible move to the downside. In fact, we should expect this in December. Now, maybe you could say its peak is 80,000. Well, in this image, you can see that among the total trades, the Bitcoin holders, actually, from the beginning of December, we've considered this for the end of December. Two strategies. Actually, the spirit ratio is visible with a total value of 1,050 Bitcoins, targeting about 105,500 for the end of December. See how close we're getting to this number? This is an important number. We're claiming this number is important, even that. In fact, you saw the big iron condor strategy, where its maximum profit is from 106 to 112. So reclaiming this 105 is very important, and most likely our target until the end of December will be this. That means we'll have ups and downs, but ultimately 105 will probably be the target to reclaim by the end of December. Okay, let's move to the next slide. In the next slide, we've considered trades over 100 Bitcoins from December 2nd for the end of December. Over 100 Bitcoins from December 2nd up to actually the end of December. You can see that a bearish outlook is visible here. The same outlook about the possibility of a downward move that we talked about. There's a chance for a drop down to 82,500. Here, our gamma peak is at 82,500, which you can see here. So as you can see, the possibility of a downward move is visible here, right? All right, let's move to the next slide. Here you can see that we've processed the trades in the database without any volume restrictions. Here we've considered the volume starting from 5 Bitcoins and above. We've taken it into account from December 3rd, onward. 0 hour for the end of January. This is filtered for the end, for January 30th. You can see that the curve has taken on a completely bullish shape with a width of over 7,000 Bitcoins. The width of the curve is about 7,600 Bitcoins, and it shows an average of 15,500. The average of these calls that have been bought is actually 105,500, which you can see at the peak of the gamma. 105 is the gamma peak, which is the average of the positions and the maximum profit that can be gained for it. Based on the delta peak, it's around 126,000. Look, here is the intersection of the gamma curve and the red curve, and as we move forward, December is being added in. Its days and trades have a bullish outlook, and it's peaking for the coming months. Let's look at the last slide, which is interesting too. We move the slide forward again, and the trades are from the 3rd, December, 2 p.m., from December 3rd. So instead of midnight, it's 2 p.m. We analyzed it in the afternoon, and as you can see, the curve has completely taken the shape of a bullish spread. It's really interesting. So all the trades, which are about 4,370 Bitcoins from this date and time for January 30th, have formed a bullish spread, where the break-even point for this bullish spread is at 113,000, and its maximum profit is at 130,000. Here's the break-even point, and we're right here. Just look at the line or whatever. We're here, and its break-even point is around 113,000. And this is the peak profit of this bullish spread, 130,000. So you can clearly see the market's reversal and the bullish outlook. In conclusion, it seems that, especially considering the recent trades since the beginning of December, the outlook is bullish. The bullish trend is actually returning to the market, and in this bullish outlook, reclaiming 105,000 is key. That's one of the important events we can anticipate, and it's a decisive factor. Before this level is reclaimed, the evidence shows that there's a chance the price could drop again to around 84,000, and in a more pessimistic scenario, possibly down to 80,000. That possibility even exists. So it seems like before those upward moves happen, there might be some gaps to fill. I think the strength is still upward though. We could say there's still one more dip left, maybe even another one after that. It could take us down to 88, maybe 84, or even as low as 80. These are the important levels, 88, 84, and 80. Any of these levels could hold the price and cause it to bounce back. Maybe we can consider 84 as a main important target. If we reach that area, it's likely that we'll move up from there, upward, aiming for 100,000 and 105,000. Thanks for your attention. I hope this was helpful, and until the next analysis, take care.